December edition of The Banker will feature the winners of our Global Bank of the Year competition. Results will be available online from the 8th of December, the day after our awards dinner in London. So you'll have to wait a little bit longer to find out who has won. But there is another piece in that edition that is of great relevance to the international banking community, and which is about the potential impact of the incoming Trump administration in the US to banking regulation. So I'm joined by my colleague Danielle Myles, our capital markets and investment banking editor. Danielle, thank you for being with me in studio today.
Thank you, Silvia.
So the Trump administration is about to start early next year. What do you think may be the implications for banking and financial regulation in the US?
Well, obviously, during his campaigning, Trump called for the deregulation of financial services, but it wasn't necessarily clear what that would entail. And then a few days after his election, the transition team's website went live, and this clearly states that Dodd-Frank, or they're going to look to dismantle Dodd-Frank. Now, the general consensus at this point seems to be that a wholesale repeal isn't likely, and that's for a few different reasons. Firstly, Dodd-Frank is huge. It's about 20,000 pages. About 2,000 pages. It's generated about 20,000 pages of regulation. And also, obviously, it's done a lot to shore up the banking sector. It's not even really clear what the banks want themselves. Obviously, they've spent a lot of time and a lot of money complying with this over the last 6 years. So instead of that, people seem to be thinking there's going to be individual sections of it, or individual chapters are going to be the focus of Republicans. And there's three things in particular that people think will change. And one of them is the CFPB, or the Consumer Financial Protection Bureau. Now, the Republicans have a few issues with this. Firstly, it's been set up as a directorship rather than a bureau, which means it's sort of overseen by one person, which brings to life some accountability issues. It also has different budgeting rules to some of the other bureaus. And also they claim that it's taken its toll on smaller banks who have had to compensate quite a few retail customers. So the CFPB's powers are likely to be reined in. Another thing is FSOC, which is another regulator. So at the moment, FSOC can designate non-banks as systemically important, which means they're subject to the same burdensome regulations as the biggest US banks. So that power is likely to be reined in as well. And then finally, the threshold, which determines which banks are overseen by the Federal Reserve or another regulator. That is likely to be lifted. Which is a really hot
topic.
Absolutely, yeah. So that's been a big issue for a long time for Republicans. So it seems that at the moment that is about $50 billion in assets, and that's likely to be lifted. Some people say up to even maybe $500 billion.
So the way that the regulation will go obviously will be driven by who is going to be in charge of the various regulatory bodies. So in terms of leadership, do you have any insights into who may potentially take those roles?
There's obviously just a lot of speculation at the moment, but in terms of the regulators themselves, there's sort of a number of empty seats among the different regulators, and also a number of people will need to be replaced coming up over the next 18 months. So first of all, there is obviously the Federal Reserve, Janet Yellen. Her term expires at the beginning of 2018. It's expected that she will serve to the end of that term, and she can't be replaced before then, but she will have to be replaced at that point. The CFTC is missing 2 commissioners at the moment, so they can be replaced or sort of filled at any time. And then also the SEC, so Mary Jo White has said that she is going to step down, so obviously she will need to be replaced as well. Now, there's a process as to how you fill those roles, but the consensus seems to be that the people who are likely to be appointed, or certainly most of them, are likely to have a deregulatory bent that Trump and his team has.
Okay, so we're not quite sure about names, but we may have a good sense of where the direction they're going to take those bodies down to. Now, obviously, this has a very direct impact on US banks, but whatever the US regulators decide to do in financial markets and banking also necessarily has an impact on other parts of the world and other regulators. What's your view on what that could mean for European banks in particular?
So obviously, if there's sort of a lighter touch approach to regulation in the US, that may create an uneven playing field, I guess, between the US and Europe, and looking towards Asia as well. So that's something which may be taken up by the EU regulators. But also, I guess that might limit what the US can do. So certain parts of Dodd-Frank, certainly in relation to derivatives, that sees the US fulfill its G20 obligations. So I'm not too sure how easy it can be for them to unilaterally wade back in that area. Something quite topical at the moment is Basel IV was supposed to be sort of decided by the end of the year. And the US and Germany in particular have had taken different stances on that. Germany wants to make sure overall capital requirements aren't raised compared to what they are now. The US has been a bit tougher. Under Trump, that seems like that could change, but obviously his inauguration isn't until next year, so maybe the timing won't work in terms of changing the outcome of Basel IV.
Well, high stakes, obviously still a lot of speculation around, but this is certainly an area they will continue to watch very closely.
Absolutely.
Thank you, Danielle.
Thanks, Silvia.